about the other big headlines, so just wait by for a bit. Crude prices have rallied 5% now, trending at above $84 a barrel after the OPEC plus oil producers announced a surprise production cut of 1.16 million barrels a day. David Lennox, the analyst at Fat Profits, joins us now to talk about that. David, good morning. Even despite that, sudden spike up, Brent crude is still below $85 a barrel now. Do you get a sense that there is much more upside based on the news flow that has transpired in the last 24 hours?
Oh, good morning, Sonia. One would have to suspect that, yes, we've seen the surprise lift in the oil price because of that news, and we probably at this point in time will see somewhat of a steadying up of the price going forward. Yes, the 1.15 million barrel cut that comes in May and will run through to the end of this year, certainly the markets weren't expecting that. Look, overall, what were OPEC looking to, or what were OPEC seeing that perhaps the rest of the market wasn't? We think that we've talked about this on numerous occasions. There is destruction of demand being forecast if we see a recession come through. The oil price certainly declined on that fear, and we are now seeing perhaps some remedial action being taken by OPEC to lift the oil prices higher. So we're not expecting to see the price to galvanise much higher from here. That surprise factor has hit the market quite quickly, and we've seen the result of that, as you've said, with Brent up at $85 odd.
Hi, David. Good morning. So for the year, given the kind of cues that we have with regard to demand, supply, and this recent cut, what is the broad range you'll be working with?
It certainly is going to be a broad range. It really is at this point in time probably difficult to sit down and say which direction the oil price will go. You'd have to back OPEC and say that they want it higher, so we would be suspecting that oil prices would move higher. We had called for a higher range, but we weren't convinced of that when we started to see the recessionary fears set in and the demand starting to perhaps get destroyed by that fear. So look, overall, we would expect to see Brent trading in the near term probably up at $85, probably not much above that. Going out into the longer term, if we do see this consistent Brent and WTI price, and it does start to feed back into global inflation, then that's really going to change the scenario again. That will lift the fear of inflation again. And we think towards the latter part of this year, if that fear is still in place, then demand will certainly be lower, and that will bring the oil prices down. So overall, we're looking at this point in time in the short term up to between $85 and $87, but perhaps longer term we could see the oil prices actually weaken, and we wouldn't be too surprised if we saw it between $70 and $80.
David, any political ramifications of any of this? There is the SPR in the US as well. So some are saying, well, this could be because they were not filling that up as fast as maybe the Saudis would have liked. Any thoughts at all?
Look, it's difficult to determine if there's any political scenario in what OPEC have done. We would suggest that the only benefit that they've gained is that they've probably knocked US shale production for 6, and they don't expect to see that production coming back on stream. Of course, as they raise prices, if they cut production further, that could change, but I think they're very comfortable that they now control the markets again, and probably from that perspective, that's really all that they were looking for. Yes, get control back out of the shale oil producers' hands. It's taken a couple of years for that to happen. We think that's probably the only political agenda. We're all well aware that the recession fears were growing, and we saw the oil price reacting to that, and OPEC have stepped in to try and reverse that fear.
Okay.
Sonia, if you remember, 3 weeks back, we had the beginnings of what looked like a positioning-driven tactical rally, which did not materialize because SVB happened and everything went haywire. Last Friday, we were making the point that maybe this is the beginning of, a little bit of a decent move, a relief rally, and there is room for that, right? And then we've got this oil price jump, although this is not as significant as, because this is still in the infancy. The move is just 5% at one day, reacting overnight to all the action. So maybe it'll not last, but definitely it's a better situation as compared to banks going under and banks going bust in the US. But it does muddle the waters once again. It's not all clear.
I guess these are all imponderables, right? But David, thanks a lot for joining in and giving us a quick update. So that's on the